Today, I would love to talk about a CrowdStrike. I didn't really have a chance to dig really deep to go over the numbers, but that's why we have you guys here with us today. So if you guys would like to kick off and go over the earnings report just to discuss what stood out for you, and just feel free.
I can just give a really high level rundown of how the quarter went, and then we can turn to other guys or other guys for more qualitative stuff. So
Sounds good to me.
Revenues beat their top line internal guide by 3.5%, up 70% year over year. That it was the first time in 3 years we saw a sequential boost in Q1 net new ARR growth. And we got a nice quote from Bert on the call saying that was not from AWS, but from quote unquote broad-based demand. 29.8 million in income from operations. That was a 37% beat, 9.8% margin, expanded from 0.6% year over year. So everything good there. They raised their full year guide. They're seeing more momentum with users with 4, 5, and 6 plus modules, which, just to remind you, that's important because CrowdStrike really doesn't spend anything to onboard additional modules. So this is a sign of margin expansion and a really good tell for that. Additionally, subscription customers rose 82% year over year. That did get an 8% bump from Humio, but I mean, yeah, looking up and down, the margin profile and the top line, and 79% sub gross profit margin, operating cash flow margin 48% contracted a little bit, but really nothing. I mean, 55% operating cash flow margin is just absurd. So I'm cool with 48. Really nothing to pick at. George Kurtz always delivers, and this quarter really was no different.
Yeah, I was also very impressed by the free cash flow. So if you look at this quarter, they had 170 million in free cash flow on a total revenue of 302 million. So that's a free cash flow margin of about 39%, which is incredibly high. Apple is always talked about. It has about 25-ish, free cash flow margins. Facebook has around 30, I think. These are the best companies of our time, and CrowdStrike at this stage already has a free cash flow margin of 39%, which is incredible, and it's up from Q4 as well. So where it was I think 36, 37 in Q4. So that was something that really jumped out.
Yeah, I saw this tweet maybe like 30 minutes ago or so that saying that CrowdStrike is still in hyper growth mode. And what do you think, Muji?
That's an affirmative. It is absolutely still in hypergrowth mode, which is why it occupies my number one position. Yeah, pretty great numbers. Obviously, this company was growing in the 80%, 90%, 80%, now in the 70%. It's, an expected revenue, slight trend of a decline just because it keeps putting up bigger and bigger and bigger numbers. I like that sub revenues are growing 73%. ARR is growing 74%, although Humio is a bit of it. Sub gross margins 79%, up a point sequentially. Margins, retreated a little as mentioned. No big deal. OpEx went up significantly. I haven't looked in more detail at it, and I haven't listened to the CC yet.
That was because of I think that was because of the Humio acquisition.
Okay, great. That's good. Easy explanation. Astounding metrics that I love to hear. Half of net new customer adds added 5+ modules, and more than half their customers have 5+ modules. They are It's showing they are extremely adept at not only keeping up this rate of innovation and having 20 plus products at this point within their platform, but they're great at selling it. That's wonderful news that those metrics of how many modules, these kind of cohorts of customers have keep growing. I love that vision into their kind of modules. Obviously, they're still topping all the lists for the industry watchdogs like Gartner, Forrester Wave. They're winning awards left and right. They're strengthening alliances, including with Zscaler, another company I own that's heavy into zero trust. They remain anecdotally, or not anecdotally, but outside of earnings, just the overall momentum with zero trust and how, quite frankly, CrowdStrike is a pick and shovel of zero trust, and SASE networks, if you're familiar, uh, is a wonderful position to be in right now. So they've gotten a lot of interest from cybersecurity over the past year. There's been hack after hack after hack, massive breaches, ransomware, nation states hacking and having cyber espionage into us, into the United States government. It's just it's brought the mentality over to zero trust, and then the icing on the cake being that the federal government a couple of weeks ago just issued an executive order to overhaul the nation's security with zero trust and endpoint protection. And so CrowdStrike is just in a wonderful position right now, and is showing me all the right metrics that's going to keep it in the top of my portfolio.
I would add super quick that, I mean, I agree with everything you said. I'm never going to disagree with Muji on anything he says about a CrowdStrike. But I mean, just some more color on what he's talking about between Zscaler and CrowdStrike. Kurtz was talking about Zscaler pulling CrowdStrike into a giant insurance deal last quarter, and CrowdStrike pulling Zscaler into a large iBanking deal. So it really seems like they're fortifying themselves as the 1-2 punch between workload management and network management. So I mean, or network security. So yeah, really exciting stuff there. And we got the fun quote. Zscaler is now a user of CrowdStrike. So I mean, it seems like they're just deepening the connection, and it's really fun to see.
Yeah, something
Wow,
else
that's fantastic news. I have to say, I didn't listen to the CC, so now you're getting me extremely excited too, because they've never provided color that in depth on the Zscaler partnership. So I really want to hear those comments. Sorry.
Yeah,
Yeah, I'd love to.
something else that really stood out to me was another number, was the RPO. So the contracts actually that are signed but still have to be paid, and that was up 97% year over year, and that's and there was also a question about that on the conference call. How come that the difference is so big, and it almost doubled. And the reason is, more multi-year contracts, more and more companies trust CrowdStrike to be the leader, to continue to invest in R&D, and they see that in more multi-year contracts, which is of course very good to see for a company that they have revenue coming in that is already secure. So that was also something that jumped out.
Yeah, like everyone said so far, the numbers were really good. So they guided for 56% full year revenue growth at the high end of the range. So we'll probably see over 60 full year, and we're in a really strong spending environment for security software. That should benefit the disruptors the most. I mean, they talked about it on the call. They now have 11,420 customers. So they talked about that being really early innings, where eventually they see that reaching six triple digit subscription customers. They had 82% growth this year in net new subscription customers. Like everyone else said, I mean, Obviously, you had the revenue beat, 39% free cash flow margin, operating margin of 10%. So just great numbers across the board, great guidance.
Great, spectacular numbers. I'm sure all of our 200 listeners right now would love to hear Josh' opinion as well, and anything that stood out to you, Joe.
Yeah, I thought it was a very strong quarter. I also thought it was an expected quarter for what CrowdStrike's done, and in all honesty, they've just churned out quarter after quarter since IPO. Pretty typical, really good quarter for them. You're looking at a 70% grower that's posting ever improving profit and cash flow margins. A couple of things that did kind of stand out to me a little bit. I was kind of expecting something in like maybe the 305 to 310 revenue range. They came up just short of that, coming in at 303. They had for a long time had the 4-module, 5-module, 6-module numbers came in great. They're accelerating again. But I did notice that, for a long time, they just gave us the NRR, the retention rate of a 120 plus. And then for a number of quarters, they switched to actually giving us a number. And I don't know if they mentioned a specific number on the call. Someone might chime in. I haven't had a chance to do the call, but I did notice on the presentation that they had, they went back to the 120 plus, kind of the generic 120 plus, and did not give us a number. So coming off of last quarter, I wonder if the NRR might have been down a little bit. And then just, personally thinking about it, if you're going to find a chink in the armor, or maybe clearly they had a great quarter, but Palo Alto and Zscaler both surprised a bit to the upside. And I have to admit and notice that CrowdStrike actually didn't. So it's really tough to say that you only held serve when you had a phenomenal quarter, but I would say that that's the case. And for those that have followed, at least with me, this has been my number one position for a long time. It ended last month at almost 29% of our portfolio. I've trimmed it a couple times when it hit 30. I'm also really fortunate, like our cost basis is kind of in the 70s. So I've been building this a long time, and it actually grew to that amount. So anyone listening, I didn't just throw 30% of our net worth into CrowdStrike. It earned that position, and you want to let your winners run. But there's a likelihood here coming off of 29. I was kind of hoping for a surprise this quarter, and I might be trimming down a little bit with a surprise pop. I probably will trim it down. It's still going to be our number one spot, probably hold like a 20% position, but I'm probably going to take a little bit off the table and maybe put it in the basket with Zscaler. I've got some Cloudflare that I really like, so I have some other things that I would like to do. But really, really happy with the quarter, and it's been my number one position. I bought it on IPO day in June of 2019, and I've held it ever since, and just never ceased to be amazed. George Kurtz and company seem to deliver strong quarter after strong quarter, and I believe this was another one.
Yeah, and talking about Palo Alto, I found remarkable that CrowdStrike was named 7 times on the earnings call of Palo Alto Networks. So, and it was each time about, but they're so good at selling. They said something like they have 8 times more salespeople than we have, et cetera, et cetera, et cetera. And if you listen to the conference call and how they talked about the partnership with Zscaler, both sales, salespeople, of both companies, salespeople of both companies are incentivized actually to also help each other. And so that I think that's a great strategy, because they actually, get an even bigger sales force than. So I was very happy to hear that.
Yeah, that's a really good point. Actually, they were mentioned numerous times. I think you said 7 on the Palo Alto call, and I think that just goes to show. And I know we had a soft day in the market today, but where Palo Alto and Zscaler had an after hours pop, CrowdStrike stayed pretty flat, at least now. Now we don't know what's going to happen tomorrow, and obviously, it could move. But at least after hours, it looks as if the general consensus right now is they did hold serve, because it closed around 216, and last I checked it kind of stayed at 216. So again, like really, really good company. CrowdStrike had a really good quarter. Just goes to show the expectations that a lot of us have had, that there's not many companies that are 70% growers that are churning out this kind of profit and cash flow. And this is an anchor type stock for just about any portfolio. And I will say I appreciate the invite to speak. I actually started out in listen mode. I don't think I'm going to be able to stay the whole time. So if I dip off, I'm really sorry about that. But I do appreciate the invite to speak, and appreciate the chance to get a couple minutes. And so I'm going to stick around. But if I cut off, I do have to leave here shortly. I really wanted to listen to Muji, because that's usually where I get all my tips from.
Yeah, Joe, absolutely. Always a pleasure to have you on our spaces, because I'm sure like all the listeners and all of these speakers get a lot of value just listening to you. So always a pleasure. Thanks for your thoughts.
That's what's fun about these calls, quite frankly, is getting everyone's immediate reactions. But it's just interesting to hear what the various folks who I highly respect their opinion of opine about what was the highlights. It's interesting how much this helps me find other things to be interested in than the immediate ones I was. So I appreciate all of this, and can't disagree with your portfolio moves at the end, Joe. It's I too have it as an extremely high position, and I agree that it was a very expected quarter. So that was a good way to put it.
Yeah, and I'll just add, Dibner. So all we got was exceeded 120%. We did not get a specific metric, and then I'll just follow that up by saying, if this is an expected quarter, I hope we can continue to expect these quarters going forward, because I don't know. I'm looking at the high point of their internal guide, and they just cleared every single high point by a very sizable margin. I guess I'm a little less focused on. Yeah, I'll just leave it at that. But yeah, I thought it was a
cannot
great
disagree
quarter.
with that either. It's high expectations. It met the high expectations.
Right, and
Yeah,
I
that's a
think
good way of putting it.
another part of that, they had a nice little got some attention last quarter because of such a strong raise. In fairness, this is the smallest they've ever beaten their stated guidance. So the guide that they did give this quarter, their upside surprise was the lowest that it's ever been, and they still grew by, they still had a strong quarter, and had a the sequential growth was good. It was 14%, but they beat their guide by less than 4%, and they had never done that before. They've always been, in fact, the last handful of quarters were 6.3, 4.6, 8.1, 5.8. So again, like, based on their history of guides, I was expecting something kind of 306, 307. They came in slightly below that at 303, but in fairness, they gave us the guide. It's the smallest they've ever beaten, and you have to take that into account for the future quarters as well. These stocks are expensive, and playing the beat and raise game is a requirement to hold some of these valuations, and that's just something that I track as well, because clearly the market tracks that.
Gotcha. Thank you for the explanation.
Yeah, I think that's very important. I just want to expand a bit on that, because the expectations that are beaten, if you see that, as a long-term investor, those compound as well. And for example, if you would have a company that, grows by 25%, or is expected to grow over 10 years by 25%, and it beats by 7% each year, that's compounded. That's almost double the revenue than at the end after 10 years. So it's very important that those expensive companies, they are expensive. They trade at a premium price, that they beat indeed, and that they beat by enough. So yeah, 4% was okay. But you also have to see like this. CrowdStrike has now raised their guidance by about 4% again, and then they beat that guidance again by, let's say, 4%. That's actually 8% if you look out, from now in the next 10 years, what you expect. You should actually, make that double. The beat. So, and then that really compounds as well over time.
Yeah, that's a great point, Chris. And actually, that was my next question. Like, what do you guys think about them raising their guidance by 4%? And do you guys think that they're going to have difficulties meeting the expectations?
No, I don't think they're going to have too much difficulty meeting the expectations. I mean, realistically, they've always been pretty conservative with the guidance. Like Chris said, the guidance raises of even if it's just 4% in a quarter, those compound, and eventually it adds up. I think the factors that are driving increased security spending, like COVID-19, obviously, it's created a more distributed remote workforce, which has broadened attack surfaces. You have, the Sunburst hack, which was, a high profile incident that's served as a reminder of, the benefits of transforming from legacy security architectures. So I think, the catalysts at this point were known coming into this report. And for the last couple of reports, so it's not a massive surprise, but eventually those guidance raises will continue to compound, and I don't think they're going to have any trouble meeting that guide.
Yeah, just to add, we got a so I think you guys said 4%. So that sounds right to me. We got a 21% raise to operating income and 31% raise to net income. So the bottom line, we got a larger boost. So that's always nice to see. But yeah, 4%. I'm looking back to check. Chris, I don't think we've met before. Stock novice, but he's right. This is the lowest beat. So thank you for pointing that out.
I think their very first quarter came in lower beat. I think I saw that today. That was the very first one. That's always a special. I'm looking at it. I can find it here. Yeah, I see the very first one was 0.49% beat. So that one was a bit lower, and then the next one was 4%, 4.6.
Right.
And then
I'm going to add in a quick hop on that. Usually when these companies IPO, and again, I was in CrowdStrike from the very beginning, that first one that came out was one of those ones that they almost like pre-announced what they were going to do. So that 0.4% was really like, hey, we're IPOing. We anticipate being 95.7, and they came in at 96.08. So that was not like a full quarter to quarter guide. The next one that they did was a full quarter to quarter guide, and it was 4%. But that first one was kind of in conjunction. I'm like with the IPO, if I remember correctly. But they've consistently been as high as, it's been 9, 6, 8, 5, 6. So anything kind of getting back in that 4, 3 range. That's what happens when these companies get bigger. It's just a law of large numbers.
Sure.
Do you think it has anything to do also with getting bigger and having maybe more analyst eyeballs on them and more Wall Street attention on them, making, I don't know, estimates a little more accurate, or am I reaching there?
Difficult to say. It's difficult to say. Maybe, but
yeah, I thought the other part is some of it's just the law of large numbers. Like a $5 million beat, if you're at a $100 million run rate, is a lot different than a $5 million beat if you're at a $200 or $300 million run rate. So again, you're playing the beat and raise game, and it's always going to narrow as the companies get bigger, just because it's so much hard. They go, and now a lot of the kind of real hyper growth ones are kind of 100 million in revenue to about $1 billion in revenue, and now CrowdStrike's pushing 1.3, and it's probably going to be closer to 1.5 by the time the year is over. So at some point, just the numbers become where those things do narrow. And to your point, where I do think you have a real point, Brad, is the analysts probably get better with their models, so their consensus is going to get better as they get more data points as well. And they'll also have some familiarity, just like we're talking about right now. You have some familiarity with how management guides.
You guys,
Yeah,
I'm
it makes
looking.
sense.
Go ahead. I was just about to say that I'm looking at their P&L statement, and losses last year were 19 million, increased to all the way to 85 million. How do you guys feel about the increased losses?
Yeah, that again had to do with the Humio acquisition, so nothing to worry about.
Yeah, take a look at non-GAAP for that. When we have M&A to deal with, non-GAAP is generally a pretty good gauge of how the underlying profitability of the business is actually doing.
Yeah, and don't forget this company. It's if it wants, it can be hugely profitable. 39% free cash flow margins is incredible. And the only reason why they, on purpose almost, are not profitable is just because they want to continue growing. One analyst said, it looks like you can still 10x your number of clients at 11,420, and management, well, they didn't really specifically said yes, but in everything they said, they George Kurz said we are in the second inning, so we are still very early, and then they see not just big enterprises and mid-market enterprise, but also SMBs more and more coming onto their platform. So they think they can be globally much bigger as well. They're I think international was 27% in this quarter. So they have, that I think over time they could be at least 50%. So they are still quite early, and I think and one of the things that I also I read my article of a year ago when I did it as a potential multiplayer, and I read it again, and there were 11 modules at the time, and they're at 19, I think, right now. So that's another reason why they can keep increasing the revenue, not just by bringing in new clients, but also their existing clients, and also new clients that want other parts of the platform. So, and they will keep expanding the platform there as well.
Chris, I think both the points you just made are incredibly intertwined. Keep not worrying about net profit. The name of the game is land and expand. This company is growing its customers over 80% year over year. It is spending all of its efforts to get new customers. Those customers are landing with 5 or more modules right off the bat, which is probably explaining somewhat of their lowered or unknown trend, but likely negative trend in NRR. So the retention rate, they're landing larger right off the bat, but it's expanding new customers. We can see that in the growth of the 4, 5, 6 module percentages of customers. We can see that customers are expanding their usage that way. To not be profitable, net profitable at this point. And so I love to see that. This company is churning a flywheel right now, and it's continuing. And then all the other trends I mentioned as far as industry trends, the government executive order is feeding another wave of customers after this. So a very exciting company to me.
Yeah, just to add a detail on top of what Chris was talking about. I mean, when Symantec and McAfee pulled out or kind of pulled back on their endpoint businesses last year, that led some to believe that, okay, maybe CrowdStrike is getting a revenue boost because there are competitive entrants that are kind of backing down. But I mean, we got that quote from Kurtz today saying they're in the very early innings of taking share from legacy providers like Symantec and McAfee, and he named those two, or it's McAfee, sorry, and he named those two specifically. So that was that was very comforting to me, knowing that this I guess macro dynamic of legacy providers realizing maybe they can't effectively compete as well with CrowdStrike as they would hope to. That's still in the very early stage of playing out.
Yeah, what I also liked the examples that Kurtz gave. One big industrial company, I think it was, who worked with Microsoft, and after 1 year, only 1/3 of their endpoints were protected, and they were very frustrated. And then the security vulnerability that would take months before a patch would come in, et cetera, et cetera. So they immediately took. So they went to CrowdStrike, started talking, and then they immediately took from the bat, as Moody said. That's one of the reasons I think the net retention rates are maybe a bit lower, because they immediately start now with with 5 modules immediately, and they applied it globally in a few weeks. And I think that's it's a real competitive advantage that CrowdStrike has, that you cannot see from the numbers maybe, or those kind of things, but those things are so hugely important for companies.
Yeah, I mean, when you think about how early innings we still are, I mean, again, 11,000 customers. When you think about that in relation to how many different businesses, both large and small businesses, that need to shift from legacy security architecture to zero trust, and they're looking for an easy to deploy, easy to manage, fast and effective model. You see why CrowdStrike has so much demand for their product.
I'm looking at their balance sheet right now, and it shows 1.6 or 7 billion dollars in cash. I was just wondering, guys, if you heard that management provided any information on what are their plans for this cash. Like, are they planning on making any potential acquisitions or anything else?
Oh, they're definitely acquiring. They acquired Preempt. They acquired Humio for $400 million. So ultimately peanuts, but it was a pretty hefty price for the customers and revenue that they bought with it. So they're not shy about figuring out the pieces, parts that can bolt on. I think it's around, in both cases, it's around buying functionality, not a platform. They're buying the functionality of Preempt. They're buying the functionality of Humio to further integrate deeper and deeper into their platform and across a couple of products. So pretty intrigued by both acquisitions thus far, and this cash allows them to become that primary security cloud they've been talking about, and Okta has, where these cybersecurity companies are just kind of getting bigger and bigger and bigger and expanding into a platform of security services. But at the same time, like this tight integration between CrowdStrike and Zscaler that we've talked about repeatedly here is also extremely exciting, much less all the money they're spending on land and expand. And so, I do look for them to spend some acquisitions, but then keeping the profitability levels exactly where they're at right now.
Yeah, Moja, I just wonder, like, how are they paying for these acquisitions? Because I'm looking at the balance sheet right now, and cash went from like 1.9 billion to 1.7 billion, and their long-term liabilities pretty much level at 738 million. So how are they paying for these acquisitions?
I'm going to have to go back and look unless someone else knows. I don't know if it's cash or stock offhand. They're certainly acquiring a technology and the personnel.
Yeah, I pulled up the press release. So CrowdStrike paid $350 million in cash and $40 million in stock and options. They did issue some debt last quarter, so that might have had some impact on their cash position not falling as much as it should have. So yeah.
Well, I mean, look at the cash flow margins. They're amassing cash at a fantastic rate right now, and so their cash hoard is growing as they're spending on acquisitions, even from the sound of it.
Yeah, I was about to say the same thing. It's incredible. Like, their balance sheet is probably one of the best in the industry. Like, if they want to, they can be debt free tomorrow and still have close to $1 billion in cash. It's incredible.
Yeah, and just talking about their M&A path, agreeing again with Muji, unsurprisingly, I some of the players in the space that I won't name specifically go after these really big fishes that are competing with them, and spend billions of dollars on it. And I really prefer the spend $90 million, spend $400 million, and have the ability to create new modules and new capabilities. It seems like a really efficient way to broaden the value proposition without spending an absorbent amount of money. So
Yeah, CrowdStrike, Okta, the same. They have that same acquisition mentality about buying features to deeply integrate rather than bolt-on products.
And one thing that stood out to me when they did the big cash raise in January, and I'd have to go back and look, I think it was like $750 million. It was interest only. It was not convertible, and I want to say it was like they had an option of buying it back in like 2024, and it probably went out to like 28 or 29. That's where a lot of them are going. I'm trying to pull it up here. So I've got it here. So the rate was 3%, and the maturity date was February of 2029. And I think what stood out to me was that they added the $750 million in January, coming off of the huge 2020 when the stock had the big run. And when a lot of people will kind of offer dilution to raise that money, they felt strongly enough about where the stock was that they just took a straight interest deal, which in January, that really stood out to me, being that was the first time they were kind of in that 225. They might even hit their high at that point, but the stock was really in a position after running where they could do a raise off of that, and decided not to do that. So that was something that I took a note of at the time.
That's a pretty interesting tea leaf, Joe. Thanks. Just a slight show of confidence on their part from a normally pretty conservative company. From the CFO perspective, it seems like.
Yeah, one of the things that I also love listening during earnings calls is Q&A session at the very end of the call. For those speakers who had a chance to listen to the entire call, did you hear anything interesting, any interesting questions or answers during that session?
I pretty much hit on everything that was interesting from the Q&A. Maybe Chris has something to add.
Did he badmouth Microsoft endlessly again?
Microsoft and Carbon Black and Sentinel-1, yeah, it was a victory lap like always.
Nice, Sentinel-1 even got a mention. That's one of the competitors to watch. Absolutely, Sentinel-1. Microsoft, not so much. I think it bugs them that Microsoft shows up in Gartner's Magic Quadrant in the top leader, and is the remotely only company near it in all these industry, leader charts. And it's because Microsoft is specifically Windows protection and Active Directory, which is heavily used across business. And so there's just a lot of Windows systems out there. And of course, George loves to point out that Microsoft's Windows is the vast majority of exploits and flaws being discovered. There's countless ones affecting Microsoft over the last year, especially Exchange server exploit. And so I don't mind. I don't normally like, being that brash as a CEO to call out specific names, but he's calling out Microsoft pretty heavily, and they deserve it. Let's be clear.
Yeah, he did again.
They're a shitty company that has been very lackadaisical about security for decades, and it's biting them in the ass right now. But somehow they still show up on the leaderboard of Gartner because there's so many damn Windows boxes out there, is my presumption, that it rises them to the top of these charts because they have so many users or customers. So
they also talked about, and Brad, you have listened as well. Was it Sentinel-1, the other one that they named, or was it Black Carbon? Or
yeah, so they were Sentinel-1 and Black Carbon, just talking about. He didn't name any specific deal win specifically, but just Fortune 100 companies where they were deciding between SentinelOne, Carbon Black, and CrowdStrike, and that thanks to quote unquote shortcomings between VMware, Carbon Black, and SentinelOne, they went with CrowdStrike.
Yeah.
So I offhand, any acquired competitor product like VMware buying Carbon Black makes me instantly not worry about them as a competitor, just from an industry standpoint. They were shitty enough of a company that they had to get bought out in order, instead of, entering the public markets and having success and having to show their numbers. And with cybersecurity, it's a rough and tumble, throw some elbows sort of industry for sure, because you're constantly. I mean, FireEye is the one who detected the SolarWinds Sunburst breach last year, and it turned out it had been 9 months that it had been in existence. So it makes them look awesome that they found the breach, but it also makes you recognize that they didn't find the breach for 9 months on their own systems. And so it's just a kind of a rough and tumble industry that I like to keep cards played a little tightly with these, and to not give them too much leash in how I watch cybersecurity. It just takes one bad breach to, be a minus 20, 30% fall away. But I think this this brashness from CrowdStrike, I don't mind. I don't normally like it in the CEO's quality, but I think it's pretty appropriate here. Sorry, total tangent.
Yeah, I mean, I cannot. Yeah, I just have to agree. I mean, normally you think you're bragging, and it's not healthy for you, for your company. But in this case, it's almost like stating facts. It's in the tone as well is not, it doesn't feel like hubris or so. It feels good. For example, Kurtz again mentioned the lightweight agent that they have. So I think I looked it up last year. It was 35 megabytes only. So other vendors, it's much bigger, and reboot after reboot after reboot. And that's one of CrowdStrike's competitive advantages, that it's so fast, it's so light, and it's so easy deployable, and there's so little friction from the very start of the sales process until the the implication of the system, of the platform, in every single place where the company works. So that's incredibly important for companies.
Yeah, speaking of Q&A session, we're already about 46 minutes in, and I was planning to having this space for about an hour, just to stick with this standard. And if any of the listeners have questions, you can just request, and maybe some of the speakers can. Sorry, Moji, go ahead.
While you're promoting the first batch, and it takes a couple seconds to promote them to stage, let me add one thing about competitors. Of the ones you guys just mentioned, SentinelOne is the one to worry about. That and Darktrace were two competing platforms that I was most worried about. Darktrace actually went public in England and didn't have that good of numbers. I look forward to the time when SentinelOne is a public company, but I just can't imagine it putting up better numbers than CrowdStrike at the high rate of top line growth that CrowdStrike has had, and the customer growth that CrowdStrike has had. So I just can't take many of these competitors very seriously yet.
And one more thing to add real quick, just to touch on federal spending. Most people know Nancy Pelosi is a shareholder of CrowdStrike, but in response to the Sunburst hack, President Biden actually called on Congress to launch the most ambitious effort ever to modernize and secure federal IT networks. CrowdStrike had over 300% revenue growth last year on the federal level. It's still not a huge portion of their revenue, but as federal spending ramps up in cybersecurity, CrowdStrike is definitely right up there. With Zscaler, those two are the ones I would be watching there.
That
Yeah, and they talked about it on the
strangely
earnings call.
similar. Just a quick point, Chris. Sorry.
Sorry.
That is very strangely similar to the blog post I just wrote for my premium side of things.
Well, they talked about it on the earnings call as well, and they say that it's not just the federal government, and they have all the licenses, and it takes time to get them. But it's also state, and it's also municipalities, and they see growth everywhere. So, and I think that will only accelerate. So,
Can I ask Muji a question, Max?
Yeah, absolutely. Go, Brad.
So, at what point do you think it would make sense, or would it ever make sense for Zscaler and CrowdStrike just to say, okay, let's just do a merger of equals, and tie the knot? I mean, it seems like every quarter we hear about more and more tie-ups between these two companies. So is that ever going to happen, or nah?
Wow, that's an interesting postulation, Brad. I like it. If only because they have extremely complementary platforms. In fact, I'd say the one item that is a product on both sides are the new cloud security posture checking tools that sit and can analyze kind of vulnerabilities of any cloud infrastructure you have continuously. They both have a very similar product there, but they are extremely complementary. I think, as you can see by how deep this relationship is between them, and so yeah, it does make sense. Although they're massive companies at this point, and which founder CEO is gonna break from their path? I think neither. So I don't expect that in any way.
That was my question. I was going to ask people that are familiar with the two companies whether they thought Chaudhry would ever work for Kurtz or Kurtz would ever work for Chaudhry, and that might be the thing that keeps that from happening, even if we see the synergies here on the call. But I'd be curious
if when one wants to retire. I don't think there'd be a stacking of those CEOs.
Yeah, I have no insight there at all. That's a good point.
That was a great question, Brad. Thanks, Muji, for answering. And I just added Eric as a speaker. And Eric, do you have a question?
Yeah, my question concerns, and I sent you a DM about this, but I'm curious what your thoughts are on security for IoT and the future of that industry, because it's just becoming it's going to be prevalent in all of our lives if it's not already. And I'm not sure if any of these companies are working on security for Internet of Things, or what you think of up and coming companies like a big one I follow is Nozomi Networks. If anyone's familiar with that, I'm curious what your thoughts are.
It's absolutely critical, but the company of the partnership we were just talking about that's pursuing that is Zscaler. Zscaler is creating kind of this machine-to-machine zero trust capability that I have again talked about in my premium service a little bit. They are kind of expanding what zero trust means and starting to do machine-to-machine. And a clear beneficiary of that is IoT devices that have to intercommunicate with some centralized service or database or API or something. And especially if they're inter-exchanging data, it can create ephemeral network connections between that device and the service that it's talking to, and then sever it afterwards. So this is, unfortunately, the manufacturers of IoT devices, think about the amount of traffic cameras proliferating around the globe that all are still on the default password or in non-firewall protected networks. Like these devices are breached very easily. So the more that these things interconnect, the more danger for companies, much less the botnets that these devices get turned into. You've got a certain camera that has a network connection, you can use it as a bot in a DDoS attack. And so security of those things is vital. You're not going to protect the devices themselves, which is where CrowdStrike is involved. you're going to protect the traffic to and from it, which is where Zscaler is involved. And likely Cloudflare getting into that same market, by the way. Great question.
Awesome. Thank you. I appreciate it. A quick follow-up on that then. So does Zscaler currently work with the DoD at all on this at all? Because, I mean, just thinking of defense tech, I mean, that's got to have huge implications.
Damn it, you're going to make me look it up. I just wrote a post about this today. They are pursuing DoD impact, so ultimately they're striving for top secret networking. They're not there yet. They are, I believe, high level, FedRAMP high level on their ZPA, Zero Trust product, which means they're shoe-in for Biden's executive order. Like they're very applicable, and federal agencies can immediately engage Zscaler as a solution. No rigmarole. It's FedRAMP high approved. So any civilian agency can immediately sign up for Zscaler right now. The ZIA side of things, which is their secure web gateway, is waiting approval for high, but it's currently moderate. So it can be used for simpler websites, but can't be used with any sort of PII transmission. So it can't be used for like Workday or HR programs or anything like that, most likely. So it's something they're constantly in, they're striving for and want to improve. I will add that FedRAMP certification is the key here. Companies have to get FedRAMP certified to more easily sell into the federal space. And all the companies we've been mentioning have FedRAMP approval, actually, except Cloudflare. But he just hinted that it's coming shortly. But one of the highlights, the things that I highlighted in the executive order today in a post was they are revamping FedRAMP as part of the EO. And so besides all the regulations, besides adopting Zero Trust, besides adopting EDR packages, so it basically explicitly said by CrowdStrike in the executive order, by CrowdStrike or maybe one or two other competitors. But Zero Trust platforms are the other huge beneficiary of the executive order. But it went on to detail that FedRAMP has to, the process really sucks right now. It took CrowdStrike 4 years to achieve the FedRAMP certification it currently has. And so it's just such a bureaucratic process. I really hope that this executive order is an excuse to better streamline it. It's going to modernize it and around Zero Trust and EDR and the other things they mentioned like MFA and encryption. But I really look for the government to getting a lot more serious about cybersecurity in general, improving the FedRAMP process, so these companies don't have this hellish time trying to sell into the federal space. So, slight sidebar.
Yeah, that was a great explanation. Thank you so much, Muji. Let me go ahead and approve the next listener, Ernest. It's showing that he's connected on my end. Ernest, can you hear us?
I see him in here too.
Yeah,
It looks like he's muted, maybe.
I think so too. Ernest, can you unmute yourself, please?
Sorry, can you hear me now?
Yes, we can.
There you go.
Thanks.
Yes, sir.
I think the problem with this is when you connect a person, it like goes silent on my side for about 3 seconds. So then I can't hear you saying anything. But anyway, just 2 questions for the panel here. I'm also interested to hear what Muji thinks about this. Is, here you got CrowdStrike growing at 70% odd. I mean, how do you think about the duration of that growth going forward? And related to that question, what are the competitors doing? Those legacy competitors they mentioned in the call, Symantec, McAfee, and I don't know if they mentioned any others, but What are those guys doing? Are they just kind of falling over, or are they fighting back?
I'm going to leave the second question to Muji, but I can take the first in terms of long-term compounding. Over a decade or 2 decades, which is the time frame I'm hoping to hold the company, if all goes well, 70% is pretty darn elevated to expect over the long term. But I mean, if it can compound at a 30-35% rate over the next decade or two, like I just mentioned, I think that's just fine with me personally.
Okay, but I mean, thanks, Brad. But how? What's informing that? Are you looking at sort of 10-year out sort of market share, or is that just kind of like you feel they could grow at about 30% compound?
Yeah. So to me, the factors that are really, I guess, contributing to that is the continued momentum in module adoption, and how the panel has mentioned we've gone from 10 to 19 modules in a little bit over a year, and how Muji talked about half of the users that are onboarding are going with 5, and that's a very new thing for this company in the last few years. So the land and expand approach just really offers a very efficient way to grow over the very long term. They don't just grow by having 80% user expansion year over year, but they grow by these users adopting more modules, and that really costing CrowdStrike nothing, like we mentioned earlier. So it seems like because of the macro dynamics of how the federal government is really focusing on cybersecurity and on all these malware attacks that we've seen all over the world for the last several years, it doesn't seem like cybersecurity spend is going to slow down very much, and it's still extremely underpenetrated. So that's just how I see it, and I know Muji can probably give you a better answer than that.
Yeah,
Oh, no, that's great.
they also guide for 60% more or less. Well, I think they will end up at more than 60% for next year as well. So, and if you look at the forecasts for the coming years, you know, I think for this year, the projections were 50-ish, 50, 51, something like that, and you know, it probably will be. Probably will be 60%. So, and then in the years to come, you know, you also see for the next 3, 4, 5 years, you also see 35, 40% growth there, and I think they will beat that easily as well. So
yeah, to add to that, I posted this on my Twitter. It was a survey of C-level executives by Credit Suisse in January, and security software was the #1 top priority for 2021. I mean, these spending cycles typically last, several years, and then to Muji's point, you have the federal government making cybersecurity a top priority. So you have, on the business side and the federal side, security spending is really a top priority for businesses and the government over the next few years.
Yeah, and I think I just did a very quick exercise here, and if I see guidance for this year, because I think the question of Ernest is also related to valuation, and if they meet their their guidance, they will be at a price to sales of 35 this year at the end of the year, which is still quite expensive. But if they grow just 50% the year after, they have a price to sales of 23. If they grow 40% the year after, they're at 16. For a company with such incredible high free cash flow, this is how you think you should think. And then of course the price of sales multiple will go down, but that's no problem. It can go down and you can still have a great winner.
I'll just add, Ernest, a couple of specifics. It sounded like you wanted some specifics.
Thanks.
This is a company that is still growing at hypergrowth, that is throwing off an insane amount of cash in its cash flow margins. Okay. And so I want to see the land and expand continue as long as possible. first and foremost. This company is more profitable ahead of its own expectations, much sooner than expected. And so I want to, regardless of growth tapering from here, as long as it maintains anywhere near those those cash flow margins, I'd be extremely happy. I'd be happy with 20% cash flow from operations, and it's over double that for the past few quarters. And so it's insanely profitable. But I want to see more customer growth. I want to see customer growth remain strong, and it has. And so new customers are onboarding at a fantastic rate, and that gets influenced by those macro decisions just mentioned, where cybersecurity breaches are coming up, and so people are, removing their head from their rear and realizing that this is an important topic. And companies are finally signing up for these services and realizing that they shouldn't be maintaining the expertise, that they can hire that out. But also the federal government changes and adoption of these platforms is another, again, customer growth mechanism coming down the pipe. Beyond that, let me pivot into the product side. They are proving extremely adept at expanding their portfolio of services. To me, equals a high rate of innovation internally, which I have to see, but also they can sell it because they are doing so well at the top line, and their NRR and their numbers where we can see customers growing the number of modules that they use, but they keep adding new ones. And so they're pivoting into cloud security posture. They're pivoting into XDR, which is kind of expanding threat graphs capabilities of how many ingests. And so that rate of innovation is also extremely exciting for me to see. Not only the financials are humming along to perfection right now, but I see that this company is setting itself up to continue to succeed from here. It's going to continue to expand existing customers. It's going to continue to onboard new customers. That'll eventually wane. But as that wanes, they're going to continue to upsell existing customers into more and more products. And so I think this company has a long runway of growth. And I'm just going to continue to watch all the metrics just mentioned, much less the product enhancements. They're coming, and exciting partnerships like the Zscaler stuff they were detailing this past quarter. So,
Muji and Brad and Chris, I mean, you guys have really been great. Thank you. Just one last thing on the legacy competitors. Are you seeing anything on your radar that they're doing, or are they just falling over and dying?
The only two I'm watching are SentinelOne, to see what their numbers look like when they go public, as I expect they will eventually. And Palo Alto is doing some pretty interesting shifts in its platform. And Cisco's, kind of keeping up and pivoting itself into zero trust just to retain its existing customers first and foremost. But most of the competition is falling to the wayside, just with the growth numbers alone that we see right now, and the amount of customers onboarding into CrowdStrike tells you that the customers are choosing CrowdStrike as the ultimate solution, not the competitors. But what was it? SentinelOne. I'm trying to think of there's one other company. Oh, Palo Alto I mentioned. Shoot, I felt like there was.
What about Symantec and McAfee? What are they doing in response?
Symantec sold its entire enterprise business to and then guess who McAfee, or whatever Brad said the actual pronouncing was. I always thought it was McAfee. Just sold their enterprise products business in March. And so to private equity. So there's all these private equities that are rolling up what I consider these failed cybersecurity solutions that are not growing, but not at anywhere near the rates that we see in a top dog like CrowdStrike. They're getting rolled up by private equity and repackaged, or they're getting acquired by other companies like VM acquired Carbon Black to bolt on some existing products. Not worried about those
Okay.
as competitors.
Yeah, I think
Okay.
bending over honestly is not that inaccurate of a way to put it. I mean, I remember a few quarters ago, I have the transfer pull up. George Kurtz was talking about, and we hit on this a little bit earlier, just Symantec just exiting large enterprise clients, just abandoning them and leaving and leaving the door open for a company like CrowdStrike to take business, to take market share. So bending over, as strange as it sounds, is not too far off from how I understand what happened.
I'm not sure I used that phrase. If you're repeating something that I said, I don't think I said.
No, Ernest,
I put it.
not you.
Oh, okay.
Yeah, because I mean, at the end of the day, the way I see it is, you see, corporates have got a certain budget for RT, and they've got a certain budget for security within their RT budget. So it seems like over the next 5 or 10 years, the security budget is going to grow a bit more, instead of being whatever 2 or 3 or 4% or whatever it is, it'll probably be a bit more because it's more important now and everything's, security hyper alert. So where are they getting,
I think you're hinting at that companies typically like a single solution. They're finding out that that's not necessarily a good idea. But in reaction to your comment about how budgets are intertwined a little bit, that's actually something that SaaS services like cybersecurity companies are integrating more with the cloud provider marketplaces to have integrated building with those cloud infrastructure providers. So CrowdStrike in particular is in the AWS marketplace. And so an AWS customer can go in with their AWS budget and pay for CrowdStrike services out of that IT budget. So there are mechanisms in place to help facilitate how all that spend occurs. And that's why you see companies like Datadog, CrowdStrike go in and make such deep partnerships with these cloud companies. It's because they want to get in on this marketplace and just reduce the friction of signing up for them and deploying them into these cloud services.
Yeah, while you guys are touching on the competition, I really would like to hear your thoughts on Fortinet. I'm really surprised that no one is talking about this, and the company's been around for so long.
That's a good point, Max. They're doing very well.
They are, and Palo Alto is too. And so I am watching them. They are appliance-based companies that are slow to pivot into zero trust. Slow to pivot into cloud services first and foremost, then slow to pivot into zero trust. And so they played a little bit of catch up. I mentioned earlier, Palo Alto is maybe the one that worries me the most, if only because they're completely realigning their business around EPP EDR, which is what CrowdStrike does, and around zero trust capabilities, which is what Zscaler does. So Palo Alto is striving to become a CrowdStrike plus Zscaler. That combination you just were hypothesizing about, Brad. And so that's the one competitor I've got a little more closer eye on, but none of these companies, they're all huge companies with a lot of revenue, but they're growing. Their growth rates are them mostly, certainly with Palo Alto, adapting their existing customers that have firewall hardware into their cloud firewall and then zero trust services and endpoint services from there. So it's about saving their own customer base right now with these companies. But they are doing, ultimately, I think all of them are doing well. It's a rise, it's the tide rises all boats here.
Well, thank you so much, Ernest, for the question. I really appreciate you asking, and thank you so much for staying up that late for us. Thank you.
Thanks very much for having this. I appreciate it. Thanks, Muji, and everybody.
Yeah, thank you.
Thanks to Max. Thanks, Chris, Brad, David. Awesome stuff all around. And Joe.
Yeah, I always learn so much from these. So thanks for having me, Max, and then thanks for hopping at the last second, Muji. Thank you. That's all I can say.
Yeah, you guys as speakers always did an amazing job, and like I saw Muji just posted that it's probably one of the best reactions that he heard on Twitter Spaces, and I concur with this 100%.
Well, with
Thank
the
you, guys.
caveat that CrowdStrike makes it extremely easy to have a very jubilant earnings call discussion. They deliver perfection for the most part. So, but yes,
Yeah,
great call, everyone. Appreciate it.
Thank you so much, guys. For all the listeners, please give all of our speakers the follow. Great content. Wolf, thank you so much for being a part of this as well. I think you've been recording these spaces, if I'm not mistaken. Yeah.
Yes, sir.
Perfect. So we have the next spaces will be on Sunday at 2:00. We'll be talking about ed tech industry. Brad will be speaking there as well. So I'm looking forward to this. See you guys later. Thank you.
See ya.
Take care, Max.
Have a good night.